So you've got two kinds of major forces. You've got geopolitically, the risk is off. So no risk about Iran war, no risk about any kind of war, more like, peace and all this kind of stuff. And the Trump administration that needs oil prices down because oil makes everything, right? Oil is a major input to economies. So if oil prices are low, then you kind of mitigate inflation and you manage to push up economic activity. So that's one. On the other hand, oil, I think, basically has been trading sideways for a couple of years now, and with everything, with every other asset wanting to rally. So look at the S&P. They keep saying like, inflation was hot, and I don't know, and they might not cut, and all the rest of it, and we're going to fall. And what happens? It rises because the S&P is reflecting inflation numbers. So the S&P wants to go up, gold is legging it, risk assets are going up, inflation is quite running hot, 3%, I don't know what, blah, blah, blah. So everything wants to go to the upside because you've got, and the dollar, what's happening to the dollar? It's falling. Who would have thought the dollar's breaking its, hit a stone wall and it's coming off. So with all that kind of stuff, oil is the only asset which is quote unquote pressured. How long that stays is going to be very interesting because it's been unable to. So if you look at Brent's trading about 74 something, 75, it really needs to move above 76.50 to get any traction to the upside. And it really needs to move below 70 to start breaking down. Now, either of those is acceptable, but what it keeps doing is trading in a narrower and narrower and narrower range. At some point, it's going to break up higher or lower.